welcome to Top Bookkeeping for Beginners. So today I'm excited to share with you our chart of accounts and some things that we're going to take a look at before we move into QuickBooks Online next week. I want you to understand a little bit of how the accounting works, what the accounting looks like, and this will help you when you are running your software for your bookkeeping, whether you use it through QuickBooks Online, you use a spreadsheet, whatever source that you do decide to use. But I would highly recommend QuickBooks Online. I've been on it for over 15 years, and so I think that it is a great program. So now let's just get to it. Okay, the first thing that we want to look at in our business is our assets. And our assets are things that are valuable to us, that when we take our financial statement to the bank, that they look and see, how much we've invested in our business, what we've bought, how much money we have in our bank accounts. So the assets are very essential. Now, things that we commonly use as assets are going to be our checking account, our savings account, our money market account, where when we're earning our profits, we're going to transfer that money into savings or money market so that we can pay contractors, pay vendors, and pay our payroll. So sometimes we do separate that in our business. The next thing we're going to be looking at for assets are accounts receivable. Accounts receivable are invoices that we've entered into the system, or you've entered through some type of invoice and you've sent to your customer, and now we are waiting to get our payments. It may be that it was due upon receipt, which they have to pay it immediately when they receive the invoice, or we may give them 10 days to pay it or 30 days to pay it, whatever you decide with a client of how they're going to pay it. So those are the accounts receivable. The only other thing you would have in accounts receivable is if you did loan money to someone, then that would be in your accounts receivable because you're expecting to get that money back. So that's money coming into the business. And then the next place that we can have an asset is in our inventory. Say that you sell products, and so you've ordered, 100 products or something that you're going to retail, then that would be an asset in your business because that's going to generate money and profit and cash in your business. So that's what our assets are. And these are our basic assets. There's, of course, in all of the accounts, I'm going to go through more that you can add to it. But I would suggest to you and recommend to you just to start with that you use some basic accounts. And then as you learn how to do your bookkeeping, then you could add more advanced accounting for your particular business, because each business is unique in their chart of accounts, the accounts that we use, the trending of your own business and the story that your own business tells. So you are very unique with your gifts and your products and your services. And then the next thing that we're going to look at is our liability accounts. Now, our liability accounts is money that we owe others, that we may have borrowed $10,000 or $5,000 to get our business started. So we have to eventually pay back that person or pay back the bank or the credit card, whatever that is. So that's what your liabilities are. Now, this could be accounts payable where a vendor has given you credit and you can pay it in 30 days or 15 days. And so that would be in your accounts payable. So it can be different things that you have that you're going to pay at a later date. But this is a minus in your business, so you want to keep your liabilities as low as possible. And then loans, as I spoke of before, that's another area, that would be your liabilities. And then your payroll liabilities. If you are running payroll, the money that you have to take out of employees' paychecks, and then the amount that you have to match for IRS and FICA and Social Security, which is 7.65%. So when you file your taxes, you're actually paying 15.3%. So when you do decide to start running payroll, just know that that is going to be an added expense. Even though you can deduct it, it will be an added expense. And the next thing we're going to have in our liability is our credit cards. So any credit cards that we use for the business, then we want to have that in our chart of accounts as well. And as we receive and as we spend money on our credit card for our business, we're going to automatically write that off in the same year that that happens. So we're going to get that deduction. So that's a great place to start there. And then the next thing is what we call owner's equity. And this is basically the money that you've put into your business. Your owner's equity, say that when you started your business that you invested $5,000 when you open your checking account just to get your business going, or if you put in $50, either way, it's what you invested in your business. And as your business grows, and you need to contribute more money into your business for a certain project or a certain marketing plan, then you would have your owner's contributions. And then when you take money out that you've put into the company, that is your owner's draws. So that's what owner's equity is. And then it will also have our retained earnings, and that is the earnings that we earn from year to year. Say in 2019, you earned $2,000, and 2020, you earned $3,000, then your retained earnings would be up at $5,000. So that's how that works with owner's equity. Then the next thing that we're going to look at is income. The different types of income, the sales, the revenue that we have for our business. So that is any time that you sell a product, that you perform a service, that is going to be your income. Other types of income could be interest income from the bank, that in your money market account that they gave you $2.50. So that's your earned income interest for that. So then there can be some other different kind of business income, depending on your situation, but those are the main ones. And the next thing that we have is our cost of goods. And cost of goods are the expenses that it takes for us to create a service or to create a profit directly, such as any supplies and material to make a product. It can also be your labor or your payroll that is going to that particular project. But for the cost of goods starting out, I would just keep it, very low, like your supplies and materials, some direct dues and subscription in order to provide that service to a customer. That's another easy way to look at that, and it's a great way to look at it. But I always like to keep a cost of goods because it will tell me on my financial statements before I pay any overhead expenses of what I have earned, what my profit is. So if I need to lower my overhead, then I know the categories that I'm going to have to work on to lower that overhead to make the most profit, because that is our goal. The next area is going to be your expenses, your overhead expenses. And these overhead expenses, they can be like in auto for your gas, your oil change, your car wash. It can be for bank charges. It can be for interest on credit cards. It can be for meetings, your meetings with clients or associates or different people at restaurants. You can deduct those. You can deduct if you go to a conference or a training, just, going around town, for your office supplies, you can deduct that. Then also our rent. If you're having to rent somewhere, then that is tax deductible. Say that maybe you work out your home right now, Then when you go out of town, you had to rent an office, then that is tax deductible too. And then, of course, we have payroll. And then I think one of the biggest ones that we really have to pay attention to are all of our dues and subscriptions that we have, since a lot of things are in the cloud now, that you have to pay subscriptions for those, such as your QuickBooks Online, Adobe, ConvertKit, just different things like that. And any association that you're a member of, Better Business Bureau, some networking or speaking group, then those would be the tax deductible items there. As we're receiving payments from customers, when we offer them to pay through credit card or ACH, then the payment processor company, whether it's Stripe or QuickBooks, they will charge us a fee in order to offer that service to our clients. And then we have our utilities like our electric, our gas, our trash, our water, anything in those categories. But those are the ones that I would start with, and then you can add as you're going along. Thank you so much for tuning into my channel today, and I hope that it's helped you out. And please look in the description for a link. I have created you a cheat sheet with all of these categories. So as you're processing your income and your expenses and liabilities and loans and things like that, that you can easily see what category that they go into. And so this is really going to be beneficial to you. You'll know what your real numbers are, how much you're spending in each category, and where you need to increase, say, sales and decrease dues and subscriptions or auto bills, different things like that. So this will help you really know how to run your business and keep you very profitable. So anyway, I hope you guys have an amazing week. And please leave in the comments any questions that you might have or any type of video topic that you would like for me to talk about. And then next week, I am very excited for us to actually get started into QuickBooks Online. But before we did that, I did want to give you some prerequisite information so that it would help you once we get there and make it far more simpler for you. And once again, thank you so much for tuning in.